Good day to you, ladies and gentlemen. It's Jeff here. That's right. That's right. It's Jeff, ladies and gentlemen. And I want to do something different here. So, some people know me as a 30-minute trader. Some people know me as the guy from the Super Trader program. Wherever you know me, I do welcome you here today. We're going to focus on this group. That's right. In this group, we're going to focus on institutional trading. Trading futures, the E-mini S&P500, ladies and gentlemen. That's right. E-mini S&P500. I want to show you how to get a funded account. For those people who could be an overview, want to do it myself, upload the recordings. And also with that, ladies and gentlemen, if you want to be part of the system, the Super Trader program, I'm completely honest with you, for some people, they will never be able to afford this because you have to have ideally we want people to have a minimum of 100,000, 100K in prop firm funding on their own money, but we'll accept 50,000, someone who's applied for 50K and they're actually going through the process. Yeah, but ideally 100 plus, because the reason we call it for the Super Trader is most people in life, that is beyond their means. So what I want to do is when people have the skills, when people have the knowledge, we're going to up their game. We're going to focus on the important things, which is growing accounts. We're going to focus on high probability trade setups with using an institutional style of trading, ladies and gentlemen. Now, what does that mean? Great question. Well, it depends who you ask. You could use DOMs, you could use ladders, you can use all these different things, ladies and gentlemen, but it's the footprints, but it doesn't really matter. The truth is simple. I'm not going to show you my qualifications. I want you to unbelieve every single thing I say. I don't want you to believe anything I say. But what I want to see is the recordings. I want to show you the proof that it's simple, it's possible, it's real. That's right, ladies and gentlemen. And when you see this, you'll say, perhaps I should be doing this. It's not cheap. I've got to be honest. For some people will say, is that all it is? It starts on 550 US dollars a month. We do have a discount. If you pay 12 months in advance, 28% discount. You can work that out for yourself, ladies and gentlemen. You should be able to do that in your head with a calculator if you want to become traders. So I'll repeat that again, $550 monthly or 28% discount we want to pay yearly. This will be the first step. Once you end up passing this with me, ladies and gentlemen, and you will, we'll then move you on to 200, 300. We then look at getting multiple accounts joining together. This is why they call this the Super Trader program. And the whole thing will be funded with your funded account. So here we go, ladies and gentlemen. Here we go. I'm going to show you, I'll show you my group. So this is the group we're talking about, the E-mini S&P Trading Official Group. That's me, Jeff's official group. As it says, my name's Jeff, it's official. Thank you very much. And this is the promise here. Thank you very much. 1.3 thousand members, can't be wrong. That's right, that means. So here we go, S&P, see, I have two different things on my charts. Yes, I do have a few lines and things. Now, looking at this, ladies and gentlemen, this is currently on the 15-minute time frame. Yep. This is futures, E-mini futures, S&P 500 September contract. Forget all that if you've never traded futures before. If you've only traded stocks, perfect. If you've only traded Forex, perfect. If you've only traded options, perfect. If you've never traded before, start my 30-minute trader program, ladies and gentlemen. This is for people who have done it. Forget these. This is a variation. These here, these lines, these are a variation of the sessions you see in some charts. These here, just ladies and gentlemen, is to let you know, this is the weekly. My charts are set on Eastern Standard Time, and I recommend everybody do Eastern Standard Time, which is New York. Everybody in my trading program, we all ask them to set them at Eastern Standard Time. The reason for that is two reasons. Because we work with an algorithm, ladies and gentlemen. That's right. I've been working with algorithms for years, with Google, with the Mind, and now with trading. If you understand about algorithms, there's rules, there's processes, there's scripts. If you understand the scripts, the rules, at least a fraction of that algorithm, ladies and gentlemen, you can trade. Yeah. But let me just take you here. I want you to focus on the green line here and the red line. This is the high of the week. This is the low of the week. Now watch this. We have a green one there, but that's the high of the previous week. That was the low of this previous week. I'm just going to go back. Well, the high, the low. Yep, the high, the low, so on, so on. Now what I'm going to do is I'm just going to stop anywhere you like. It can be absolutely anywhere, ladies and gentlemen. There, further back. Let's just stop there as it seems to be centre. Now, I don't need to be aware, but this it has been. It was going down for some time. The S&P500 now it's been pushing on the way back up. Now you can see here, this point here, the market. If you're using, although I'm on the 15, I could use any time frame. I just want to show you the week. Yeah, but I want to show you what it does, the purpose of what it does. Yeah. So we're here. It seems to be in a range. Yeah, it seems to be in a range. So we look to the week before the high. We look to the week before low. And we're looking to take out either the low or we're looking to take out the high. What does it do, ladies and gentlemen? Boom. Thank you very much. It's done its job. Now, we do that on a daily basis as well, but let's just think of the larger picture, the people who trade perhaps on the weekly, I just want to show you how it's due. So it comes out there. It's been on a high, hasn't it? Now it's taken out the high. Next thing it's got to take out this low. Oh my God, you cannot make this up, ladies and gentlemen. Took out the high, boom, took out the low. Guess where it's going next? It's going to take out the high. That's right. Now, if I never showed you this, ladies and gentlemen, you would say this is not true. You would say the algorithm cannot be true. Well, it's clear, it's obvious, as I've showed you there today. Now, so we have taken out the high. Yeah, and it's coming out now. There's a few other rules. This is just an introduction, ladies and gentlemen. This is just an introduction. You'll see what happens next. Yep, just going to take this little tool here, something called a GAN box. Yep, I'm going to take that from there to there. Pop that down to there, ladies and gentlemen, and you can see, you say this cannot be true, ladies and gentlemen. It just a little bit short of the 50% there. That's exactly what it's done there. Done that there, boom. But what it's actually done here, ladies and gentlemen, it's this fair value gap within those, and it's went for the liquidity once again. Yep. So once we've got this here, we've got the high, we've got the low. It's either going to go for here or it's going to go for there. So what it does, it comes down and then midweek pushes back up, takes out the highs. Yep. Now you can see we're on a strong uptrend now, and sometimes it just keeps going up. Something with seasonal tendencies, ladies and gentlemen. Maybe go and look back. The third week of May, the third week of June. Now we're in July. You'll understand what I mean. This is now in the third week. So we're coming up here. This is June. So you can see there. So it's coming down. So it didn't break here. It didn't break here. Well, that's tough luck, isn't it? But that's the aim. That's what we're looking for. So we're coming down here. So let's say you aimed for the low. You were aiming for the low. You were aiming for this. Yeah. Would you be disappointed if it only stopped there? Absolutely not. But guess what, ladies and gentlemen? The following week, it takes it out. So once it's taken out the low, guess where it's going next? Boom. Boom. Sorry. Well, I'll show you that again. Once it's taken out the low, where's it going? It's going to take out that target 1, target 2 achieved. Now, if you were thinking like an institutional trader, it would completely change how you think. Now, ladies and gentlemen, I develop software, I develop tools, I develop plugins for this free software called tradingview.com. There can be a paid for version, but everything I do, people in either my 30-minute trader program or my super trader program have full access to everything I do. So I've showed you once again liquidity. Now this, although I'm on the 15-minute time frame, I'm just showing you this is the weekly, ladies and gentlemen. So checking out the highs here. Yeah. So if you're thinking about taking out the highs, next thing we'll want to take out the lows. Well, did it make it? No here. But there's certain things that it does do, ladies and gentlemen, and we'll keep that for a later date. We'll keep that for a later date. Okay. So at this point here, it's either going to come up here or come down here. Now, it started going up. And if you exit the trade there, again in profit, would you be disappointed? You certainly wouldn't, ladies and gentlemen. You certainly wouldn't. Yep. And then I did that there. It started pushing down, went for the liquidity. And as soon as I did that, guess what? Boom, boom. It's almost like it's targeting your stop losses. Now, if you want to know more about this, if you want to access the inside scoop, if you want to get more detailed information, you're in the right track. Now, this is we're on the end of the third week of July, ladies and gentlemen, and yes, again, we're on another high. Look at seasonal tendencies. So think of an institution. Raise a time, although I'm on the 15, I'm looking at other time frames, ladies and gentlemen, just by squeezing my chart in. I've not even showed you what's on next. But again, go for there. Did not reach it because we're in a trending market, or what I call a discovery. Took out them. Now, this it's quite clear what's going to happen here. But let's leave it there. I'm going to show you the charts to the left. Now, this is powerful information. Now, what I've got here, ladies and gentlemen, I've broken it down. So these here, you can see this here. It's really powerful. I want to make it even clearer. Yeah. Look at this. Look at this. So I'm still in the 15-minute time. Oh, that's 1 minute. Go to the 15-minute. I will go to the 15, 1 minute if you like. I'm happy to go to the 1 minute. It makes no difference to me. Yeah, you can see them sessions. You saw there at London and different things there. Yeah. But what I want to do right now here, ladies and gentlemen, I want to focus. I want to focus on what I said. Yeah. We've taken out the highs back here. I showed you that before. Yeah. And you know it's got to come down. As soon as it's taken out the high at the end of the week, you know it's going to come down. And it actually came down at the end of the week. And I won't mention that. Well, I could, I suppose. But yeah, I'll leave that for another time. I'll leave that for another time. So it's there. It's reached down. It failed. I showed you this before. It came down just short of the 50%, ladies and gentlemen. I'll show you that again. From there to there. Or was it just more? Oh, that was, yeah, just below the 50%. You're just waiting it. Yeah, that's right. Didn't work. That there. So what? Just wait for the liquidity. My advice to you is trade liquidity, and forget everything else. Forget all the retail logic. Yeah, I teach the retail logic and another platform, ladies and gentlemen. Yes, and last week I was showing 100% using a Forex pair using my 30-minute trader software. But what I want to do, this is for people looking at big money. This is for people really looking to go for it, looking for many 50,000 plus. Ideally, want to safeguard your money, but if you have your own money, that's fine too. Again, you're not giving me that money, you're trading that. So takes out the liquidity, ladies and gentlemen. Thank you very much. And guess where your entry is? Bang, just goes to the moon. Where does it go? Takes out the liquidity back here. I'll show you that one more time, ladies and gentlemen. Oh, just how far back went it anyway. Super easy, super effective. And that's the high there. Now, I did promise you something. I did promise you something real clever. So what I'm going to do is, ladies and gentlemen, I'm even going to go, I don't know, let's choose a particular time, 10 a.m. Eastern Standard Time. Let's choose, go back a week. And go there. Next thing we'll do, so we're just in this area here, last week. So I'm not going to talk about the good old days. I'm not going to talk about the good old days, ladies and gentlemen. About the here and the now. So you can see here, on the Friday, it was there. And it came down. So let's see what happened. I'm going to go down to the 5 minute, ladies and gentlemen. Yep. So we'll go down here. Up there. So all I'm going to do is mark 10 a.m. if I can. There. I'm going to go and mark 10 a.m. again every day, just for transparency. Just for transparency, ladies and gentlemen. Tell you what, I'll do. Let's use this, change this. Yeah, it goes there. That way I can't be wrong. Next day. Can't be wrong. Next day, can't be wrong. Transparency is the key to trading because nobody believes you. So best ways to show. But don't believe anything I say. Test this out for yourself, ladies and gentlemen. Test this out for yourself. So remember, we came to liquidity, pushed down, we hit a low, come back up. It failed. For those people who know about market structure, it failed to break that. It's going up. Guess what? Went for liquidity. Tick. Exit the trade once it starts reversing. Or even, to be perfectly honest, once it hits that line, I'd have a trailing stop at that point there. Away you go. You can also exit there, ladies and gentlemen, if you wish to, because of this here. This is built into the software. Thank you very much. Okay, next day. So you've either got an exit there or you can have a trailing stop at that point there. Why? Because it's liquidity, as I mentioned. So we're going to same here. So what we've got here, we've pushed up, we broke through there. So let's think of these colours. We have an orange. We think of colours, ladies and gentlemen. This might seem bizarre. I'm saying institutional trading. I'm talking about colours with a couple of little lines on the chart. Now, you would not believe it. Remember, I mentioned liquidity. Breaks through there. Yep. Remember, we're not trading to this point here. This is the trade point here. It breaks through there. It breaks through there, ladies and gentlemen. Oh my God, there's the liquidity. 10 o'clock. Boom. Yep. Where's your targets? Grey, target 1. Target 2, target 3. Is that looking for liquidity? I have a trailing stop. Now you have equity in the trade. You can just keep on going. There's a few other things you can do with that, ladies and gentlemen. There are a few other things you can do with this. You could use fibs to set for targets. You look for previous highs over here. For the pushback, you can do a whole bunch of things. Yep. But we'll leave it at that for just. I think we have enough for today. I want to show you the simplicity of this without adding Fibonacci's and different things. Because let me just say to this, if you had a $50,000 account and you only made 0.5% per day, is $250. If you had $100,000 account, and I'm not talking about using your money, ladies and gentlemen, using prop firms' money. You want to make 0.5% is $1,000 a day. And again, if you got 300,000 account, again, the prop firm keeps some. You have 3,000 each day. Thank you very much for doing a few lines on the charts. Now, this is the simplest strategy you'll ever get. Yeah, I did these sessions, as you know, but with a difference. And I've highlighted them because I'm focused on liquidity leads. I mean, that's all it is, liquidity, nothing else. So next day here, so I showed Monday, I've showed Tuesday. So here you have the Wednesday, ladies and gentlemen, here at 10 a.m. Here we go, look. So push up, pushes up. It's the high of the week. So when you ever get to high of the week, you have to be really careful, as you know. So all we're doing is, now some people heard talk about me, I talk about a turnaround time. Other people, I talk about fair value gaps, order blocks. You may have heard of that technology, tools before. But let's look at this, what this does. It goes up. This is the 10 o'clock, you wait, and it comes down. And as it comes down, pushes up this fair value gap, pushes up, ladies and gentlemen, bang. This is the 5 minute. Normally do this on the 1 minute, but just want to be clear with you. It comes down, leaves this gap here behind, pushes back up, there's your entry, bang. There. And all you're looking for 0.5%. It comes back up here, and believe it or not, takes that high out there. See that there? On the lunchtime session, takes out the high, and then drops, ladies and gentlemen, continues down and takes out the liquidity once again. You cannot make this stuff up. Now, because I'm in Bali, ladies and gentlemen, I'm in bed at this time. So that's the downsides of because it's 12 hours behind New York time. This is why I focus on my evening time, this little session here. So I'll go to the next one. So we'll move out so you can see what's happened. So it's a high, it's coming down. Let's look for the low of the week, ladies and gentlemen. Where is the low of the week? Where it's way down there. So let's come to Wednesday here. So I'm looking at these lines. I'm looking at these lines, ladies and gentlemen. That's all I'm looking at. Yeah, we've got the high. Bum, 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 bum. There's the 12, sorry, the 10 a.m. It just reached above the liquidity there. Oh my God, you cannot make this stuff. Target 1, boom. Target 2, boom. Target 3, boom. Didn't quite reach target 3, ladies and gentlemen. So if it turns around, have a trailing stop. Thank you very much. Now, at that point of time, I have to go for my bed because that's my evening. However, if you want to wake back up to here, there's fair value gap there when it reached the high on the lunchtime session, and it popped back down again, and then reached for liquidity, bang, bang, in the afternoon. Okay, next one, ladies and gentlemen. Apologize. I may have missed something out there. Yeah, whatever I've missed out. I think I have missed a day out. Actually, I think I missed Thursday out. Whatever. No, I showed that up there. And then there's the Fridays. Let's look at the Friday. As I said here, what we're doing is we're looking for these here. That point there. Wait for it to go above that line there. Thank you very much. And dropped. Liquidity. Exit the trade. That's simply it. So everybody here is looking to trade E-mini S&P 500 futures. If you're looking for institutional style trading, if you're looking for, you want to forget about all these DOMs and all this other stuff that you don't need. I'm showing you how to read the charts on a weekly time frame. I've showed you how to read the charts. It was a 5-minute time frame, although I actually do that on a 1-minute, ladies and gentlemen. If you want the inside scoop, if you want to be part of the Super Trader program, this is the right place. It's not cheap for some. For some, it's too cheap. I honestly believe that. But if you're ready to really up your game, if you're ready to make inroads into larger size accounts, hook me up. Whatever you're doing, ladies and gentlemen, my name is Jeff Goodwin, and I'll see you at the top. Bye for now.